Hello, friends. Today we're taking a look at PayPal. This stock was recommended by Basketballer43. Asked me if I could make a video about PayPal. So here is my take on PayPal. PayPal, at the moment of recording, it's selling around 55.76. In the past month, is up 6%. Year to date is down 24%, and in the last 5 years is down 34.22. PayPal analysts believe that it has an upside in the next 12 months of 40%. And they just reported earnings not too long ago. They also just got a new CEO. So we're going to be taking a look at PayPal. We're going to start with, for those that don't know who PayPal is a company that helps out with transactions. To be honest, I had to look a little bit more into all the things that they do because I have used PayPal before, but I haven't in a long time. So they do a lot of remittances. They process debit and credit cards. My understanding is they also provide pay now, buy later options. They also help merchants, stores to be able to do invoicing and do a lot of the processing and information. I think they're trying to become a one-stop kind of company, which is something that a lot of investors like about them. In their I think this is the 10K. In one of their reports, they I like this graphic because it kind of talks about the positives and the negatives about PayPal, why some people are very bullish on them and why they're very bearish on them. It seems like PayPal wants to be a one-stop company, which is great, but also which is what a lot of people like about the possibility of investing on PayPal. The question is, can they deliver that vision? They just replaced their new as their CEO. Their CEO just had their first earning not too long ago. It has been a little rocky, and this is one of the reasons why some people don't want to invest on PayPal, because whenever they look at companies in the financial sector and in the technology sector that are competitors of PayPal, they're afraid that PayPal may have too many competitors, like Apple. Apple right here, Block, Intuit. Those will be three in the technology sector that I will be a little bit worried about, because Apple has their own wallet and Apple credit card and processing. I use it a lot. Block has that competition with helping small companies be able to process some of the payments into it. They're really good with QuickBooks and all of that. When it comes to the financial services, of course, the one that I would be more worried about if I were PayPal will be Visa and MasterCard. Although PayPal do remittances and cross international processes in a way that is a little bit different. They also, I think they were getting into crypto, which, however you feel about crypto, I'm a value investor. I need to understand the company in order to invest on that. And crypto they're not companies. They're more like a commodity, and it's hard for me to understand that. So I'm sure that maybe you can, but I stay away from that. Last earnings they deliver. They beat in revenue by $35 million, and normalized EPS they beat, and in in GAAP EPS is they also beat. If you are going to be analyzing this company or looking at it, I will encourage you to be looking at the GAAP EPS just because there's a little less wiggle room for the company to manipulate some of the numbers. So let's jump right away into analyzing the company. Just as a reminder, this is just my opinion. This is for educational purposes. I am not recommending to buy or to sell this company. I'm not a financial advisor. This is just sharing my opinions, just like Basketballer 43 asked me to do. So don't make decisions based on this YouTuber or any other YouTuber. Now, when it comes to revenue, this is pretty nice. They have been growing their revenue about 17% in the last 10 years and 15% in the last 5. Some of the other YouTubers that I was looking at and some of the analysts that I was reading about, they're afraid that the revenue is going to be slowing down. This graph doesn't show that. It seems like they continue to grow. So if you're bullish on that, this is a good reason. I was looking at the number of transactions that they do, and it seems like the revenue is about 2% of the transaction. So I'm guessing that's about their fee, what they charge. Earnings, as you can see, 2021 and 2020, they had a big jump, and the trailing 12 months, it's also nice in the $3. And this is the question when it comes to PayPal. Is PayPal going to stay in the $3 per share? And this is GAAP once again. $3 a share kind of earning, or are they going to stay more in around the $2? Because that's going to change the valuation immensely. If you look at the 3, if you're a 330 kind of person, then we're looking at a 15% CAGR grow in the last 10 years, or 14% in the last 5, which is a nice consistent number. But once again, this is where a lot of the questions are. A lot of people that are bearish, they are looking at the gross margins that are kind of low, and the earnings seem they're afraid that it's not going to continue to be growing. Whether you look this way, from 2020 at 358, trailing 12 months at 337, that's kind of flat, a little bit going down. Or if you're looking at 2019 to 2022, that's still a little flat. So that's kind of the concern, is there's a big question mark about what's going to be happening. The new CEO is promising to cut cost, and he seems to be a person that is good with acquisitions and divestments, which means selling companies. I believe I heard that they just sold one of their companies, one of their sections. And they're planning to cut cost by cutting employees and maybe streaming some of the processes that they have. This will be a company that for some people, they're going to be looking at what are they going to be doing with the new CEO, what are the ideas that the new CEO has. Now, same thing with free cash flow. The thing about analyzing the free cash flow since 2018, as you can see, has been going up and down. It has been kind of inconsistent. Now, you could, once again, look at somewhere around the $3 per share to do your analysis, or you could be looking at the $4 per share kind of to do your analysis. And that's a 25% swing. However, as you can see, it has been growing. The last 5 years are higher than the last 4 years. So that is something that is very interesting. By the way, I forgot to say, their margin profit, the their profit margins average in the last 5 years is close to 14%, and the free cash flow is at 19%. And the thing about PayPal is the question to answer is this a growth technology company? Because that's going to change how you evaluate how you the PE ratios that you're going to be using for this kind of company, or is this more a kind of value company that you're looking for it to get into a discount and then go up to the fair value? So when it comes to book value per share, it's been growing about 11% in the last 10 years, or 7% in the last 5. They have a nice 15% average of return on equity in the last 5 years, 5% of return on assets, and a 10% return on invested capital, which these are great numbers for a regular company. But I think that part of the whole argument online and between analysts is like, if this is a company like Google, like Apple, like some of the companies that they were comparing themselves to, the growth needs to be higher. The return of equity needs to be higher. A lot of these numbers have to be higher in order to be considered in the same. If not, because that's going to change the whole valuation. I hope that I am understanding. You guys are understanding what I'm meaning with that. I will encourage you to just help me understand a little bit better this company. Please write your comments in the description, because I'll read all the comments within the first 15 days, and this really helps me try to understand, because PayPal doesn't have any dividends. When it comes to debt, they have a healthy debt. They could pay all their long-term debt with the average of their free cash flow in 2.5 years. So that's the debt is not something that worries me. They have been buying a lot of the stocks back. This is really good. They were a little flat, and this past year they bought a big chunk. So that's really nice. I like seeing companies that are buying their own stock, especially now that they're so cheap, or it is believed that it's so cheap. So if a company is going to be buying their stock, you want them to be buying whenever there is good valuation. You don't want them to be buying the stock. If you were PayPal, you're an owner at PayPal, you don't want them to be buying stock whenever they're 250. You want them to buy around 55, especially if you think that it's going to be going somewhere to the 80s or 100. That is how you help your owners, your share owners, and analysts think that PayPal will grow about 17% in the next 5 years. So that is, I think this is year over year. So that's really nice. When it comes to multiple, they don't have any dividends, so I took it out. The historical multiple valuation, I know that this is a little bit different that you probably see in other channels. I don't like to compare companies to other companies when it comes to the PEs, because each company is different. So what I like to do is I would like to look the last 5 years, look at the average and see, okay, in the last 10 years, if they have 10 years, what is the medium that people have been willing to pay for this company? So I look at the different PE ratios, and then I look at the average last 5 years, just because it makes it more flat and more understandable for me, at least. And then I know that some of you guys only look at the last 12 months, so that's why for your own delight, I put that information there. Plus, it helps me see a company that is growing, you want to see this. You want to see the average being lower than the trailing 12 months, because it tells you the 12 trailing months, it's so it's gonna stay around here, and then the last one is gonna be here. I don't know if that makes sense. So, for example, here in free cash flow, when I look at these two numbers, the average is 377, while the trailing is 255. So that tells me that there's an issue with free cash flow. So I want to go back and look at that. For those that are wondering how I kind of look at this, I'm already at 15 minutes. I'm trying to hurry up. Sorry. Payback time. This is if we were to look at the average free cash flow. If it were to grow 3% for the next 15 years and we're just collecting all the free cash flow, that will mean that a fair value, not discounting the cash, it will be about $76. We will get $76 in free cash flow. When it comes to earnings, if we were to grow the earnings the next 5 years, multiply it by a average 25 PE, growing them at 10%, we will have a future value average of 110. And if we discount it, that will be around $54.82. When we use Warren Buffett's owner's earnings valuation, which I'm not sure, I don't know if this would be a good company to look at, but I like the numbers. So if the average would be about 55.22. It might not be the best way to analyze this company, but I'm going to leave it there. Whenever we put everything together, we'll come up to a fair value somewhere between $95 to $102. If we apply a 50% margin of safety, we're looking at somewhere between $48 to $51. Right now it's at 56. So if we were to put a 45%, you will be somewhere between 40 and 45% upside, which is about what the analysts are thinking. In conclusion, this seems to be a good company to do more research on. I personally don't know. I'm going back and forth whether I will add it to my portfolio. I think my issue is not the numbers. My issue is the understanding of the business, and I don't know if I'm capable to understand it. And maybe you are, and with that would be awesome. But if I don't understand a business, and if it's too complicated for me to understand, I'm not going to invest on it. I have other opportunities out there. So I hope that this helped. Please subscribe, leave a message, and I'll see you next video.